Good morning, traders. It is Monday, August 1st, 2016. It's 8:02 a.m. Chicago time. I'm going to start out by saying that I'm having the broadcast from home. There's an issue with the connection, and there may be some dropped frames. My suggestion is to listen as closely as you can, and then to re-listen once I post the video. It should be cleaner. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. If the screen seems a little fuzzy, it's because I'm broadcasting in 720p instead of 1080. It should be clear enough for you to read the numbers, but will reduce the amount of interruption to the stream. Let's take a look at what we have as far as news overnight. The key element this overnight session is that the European Banking Authority finished its stress tests and has said that the stress test demonstrates the resilience of the EU banks. Of course, the world's oldest bank, Monte dei Paschi di Siena, also Italy's third largest lender, was the only lender with a key capital ratio in negative territory. The test also provided some insight into the relative weak capital positions of Barclays and Deutsche Bank, two major banks. So that's where we are currently. You saw the pop overnight. China's manufacturing slowed, but services improved. That's welcome news. And then as far as what else is out there, there's news on Uber, but I don't believe that's a factor in our time frame or context. As far as what we are expecting going forward, this week's got quite a bit going for it. Today, the expectations for today, we're getting the U.S. manufacturing PMI final at 8:45 a.m., 8:45 Central, 9:45 Eastern. The expectation is 52.9. And then at 9 o'clock Central, 10 Eastern, we get U.S. construction spending, expecting 0.5%. Also at the same time, ISM manufacturing, expecting 53, that's for July. And an ISM prices paid, expecting 61. We have Fed Speaker, well, we had Fed Speaker Dudley, and I don't see anything else on the calendar other than the usual 3 and 6 month bill auctions. Since it's Monday, let's look at the week. The week ahead, tomorrow we get the personal spending and PCE deflator numbers, also ISM New York. We have Fed Speaker Kaplan. On Wednesday, we get the Caixin China Services PMI business number. That comes out at 8:45 p.m. Tuesday evening in Chicago, 9:45 p.m. in New York. And then we get the services PMI in Germany. We get also for Europe and the UK. We get ADP at 7:15 on Wednesday, 7:15 a.m. ADP is one of the largest payroll companies. Ooh, yeah, the audio is pinging all the way up. Let me turn that down. Audio should be much better. The ADP employment is a number that's released by the largest payroll processing company in the U.S. and is supposed to be a precursor for the non-farm payrolls, which is the largest number we have this week, coming on Friday. Of course, Wednesday we get services PMI, non-manufacturing ISM, but we also get crude oil, distillate, and gasoline inventories. Thursday we have the Challenger job cuts, durable goods, factory orders. We have Fed Speaker Kaplan again on Thursday, and on Friday we get German factory orders, and then the key number on Friday is at 7:30 a.m. Central, 8:30 Eastern, and that's non-farm payrolls, expecting 175,000. If you recall, the last one was a blowout number, 287,000. Much better than expected. Unemployment rate at 4.9%. We get consumer credit on Friday afternoon, and that pretty much finishes up the week. So this whole week is peppered with numbers, culminating in the non-farm payrolls at the end of the week, with today giving us the ISM or the U.S. manufacturing PMI, construction spending, and ISM manufacturing all coming out today, this morning. So that's where we are. Let's take a quick look at what was expected on Friday versus what happened here. Let me pull up that screen. Un momento, por favor. All right, so here you go. So this is the primary hypothesis of Friday. The expectation is for, because we were opening in the middle of a double distribution profile from Thursday, Friday was expected to push to the overnight low, 2157.50, after an open auction, and then the expectation is for a rally later in the afternoon, and then potentially closing somewhere in the middle. Expected mostly an inside day on Friday. Didn't see any cause for an imbalance, except on Friday I reminded everyone that it is the end of the month and there may be some interesting positioning happening right at the closing range, meaning the last 25 to 35 minutes of the trading session. Here's what happened on Friday. Friday dug a lot deeper, pushed much lower than the expected. Whoa, what's going on here? Okay. It pushed much deeper than it ended up pushing to our target 2157.5 that I just showed here. See that 2157.5 right in this spot right here. It pushed right to it, but it went there fairly. It went there fairly aggressively, pulled back to the mid here, set us up for one potential trade for a rotation down. That yielded about 2 points, and then off to the races it went, and it ended up breaking above Friday's high. Notice though that the initial test, the opening swing high on Friday, was right up against the point of control. So what this day traded in a very, very orderly manner. It opened, went to the point of control, the prior day's point of control, which was the high volume node up top, and then it tested the overnight low and the high volume node down below, the second distribution, and then it broke through, and it ended up pulling back to that high volume node again before closing near highs in a P shape. And on Friday, note that it ended up making a P shape. Well, this is backwards here, but it ended up making a P shape, a squeeze, and then finding balance higher than the prior couple of days. We ended up breaking out of this tight range that we've been in since the 14th of July, with a point of control near highs. And what this does here, with the close being as high as it was, right on the extreme, this sets us up for a continuation trade in the overnight session, and we did get it. We went to 2177.75. So overall, the performance on Friday was pretty fairly orderly. The issue with Friday's trade is that if you missed the sell on the mid, and once it broke higher, it basically went into this really choppy back and forth. There was no real, except for scalp setups, there's no real setup with decent risk reward once it did that. Friday left us with a key LVN right at 2165.5. We need to monitor that today. The overnight low from the session last night, 2168. So if we break the 2168, the expectation is for a test of 2165.50. If it does get down there, the overnight session ended up pushing to new all-time highs on Globex at 2177.75, but has fallen back and it's trading right here at 69.25. So if it remains here, we're opening in range, in value, it changes things a little bit. It makes the read on the overnight test a little bit trickier. Let's adjust this a little bit. Here's the overnight session. So the overnight session, first of all, the first thing we notice is it's at 182,000 versus a 200,000 for a market that has pushed that far higher into new territory. It did so on fairly low volume, created a high volume node up top, but it is really accepting Friday's value area and is stuck here. Notice the move down is impulsive. We retested Friday's high and are trading near lows. This is creating a situation where we're likely to continue lower on the open, and that's the primary expectation currently. It wasn't so before this morning, but currently the way the market is set up, it is looking like the continuation trade is occurring, will likely occur on the open. So we expect a test of 167.75. That's such a fuzzy number. Anyway, so that's how things were shaping up overnight. Just a quick word on the end of month. So here's the monthly again. I discussed this on Friday a little bit. We finished the month right up here. See this little asterisk at the top? After running the range, a fairly wide range for July, we ended up putting a very, very tight consolidation zone and high volume at the top of the month. Essentially what the month did is it ran up to where it is, to the 2149 to 2169 range or so, and has stayed there since. We've broken out of that range this overnight session, but it ended up closing right near highs where that asterisk is. This is showing a fair amount of strength. However, in an auction perspective, this isn't the ideal situation for a continuation higher, meaning a continuation higher is likely to be faded. Again, because of the way this is set up, essentially the auction is extended at this point, and any push higher is likely to be faded. In other words, the commitment on the part of buyers is not that great, given the structure that we're in currently in this P-shaped monthly profile, and the fact that we've spent the bulk of the month just sitting in a tight range. When you sit in this tight a range and then you start to break higher, the expectation is energy is likely to dissipate. A lot of energy is likely to build up and dissipate to the upside. But currently, this auction is extended. July's structure is fairly poor from 2149 down. In other words, if we break down below 2149, if there's any reason for the market to sell off, we're likely to see this trickle down very quickly. So pay attention to the levels here on your July profile. It is likely to push down to that 2183 area fairly quickly, and for whatever reason, there's just not very good structure below us. That's a very important thing to note just for the intermediate term in case the market starts to adjust downwards. As far as what's expected today, I've rambled on quite a bit here. What's expected for today is sorry, hang on. Okay, good. What's expected for today? The expectation for today is an open auction. Again, why is it an open auction? Every day it's an open auction, It's an open auction because we're opening inside of this accepted value within the prior day's range. This means that despite the movement overnight, the overall market sentiment is that there's the value left behind on Friday is still considered value and is accepted. And so what that does is it puts away the enticement from buyers or sellers to push in a directional manner. In other words, if we open Up here, there's an incentive for sellers to step in. Prices are higher, and sellers will step in and bring it back into balance, which means that the overnight inventory is long and it's likely to go back in balance. But if it opens down here, then there's an enticement for anybody that's short to cover some of that position, and we get responsive buying back into balance as an expectation. And what we have here is that it's opening right inside of balance, and therefore against the point of control, by the way, the overnight point of control, and therefore the expectation is for an open auction. I expect an open auction today. I expect to push higher initially. I'm looking for a push lower down to 21.65 and a half, and then I'm looking for it to pick back up and do what it's done over the last few sessions. If you notice, we keep pushing higher later in the session. I expect it to do the same and potentially push through and test this measured move that I've pointed out all week last week at 21.74. At 21.74. At 21.74. And then potentially test the overnight high after that, although I don't have high hopes for the overnight. So that's your primary hypothesis today. The secondary hypothesis is the same thing. A failed attempt higher, push down, break through the 21.65 and a half, at which point I'll be looking for any pullback towards that 21.65 and a half or the point of control for a sell, and I'm going to look for that point of control, the MC point of control, 21.60 and a half as a target. That is your secondary hypothesis. Okay, that leaves you with both plans and an outlook for the week, and that's the goal here. Hopefully this is something you're gaining from. I also want to remind you, this week we do the public AMA. The public AMA on Thursday. It'll be at 3:30 Central, 4:30 Eastern. You should be able to you'll see invitations to that on the Twitter feed. Also in tomorrow's video, look in the description in the video. I'll give you a link. And also, if you're looking at this site, if you're looking at this page through the Stage 5 website, the TraderBite page, it'll be contained on there as well. And if you're on the list on futurestrader71.com, you'll get notified about it as well. It's your chance to have a conversation, ask the questions that you want to ask, okay? Good luck today, and I'll catch you tomorrow. Take care. Bye.